Hello, good afternoon. My name is Sasha Star. Welcome to our investment show. And today I have a very special panel of guests whom you all seen on ibmtv already. And let me introduce them one by one. It's first of all Lee Shepard. It's Jim E. Also, we have Mark Lee and Ankit. How are you, everybody? Let's talk about investments. Jim, you should remember what are the first, second, and third rules of investment?
Well, the first rule is preservation of capital. And the second rule is go back to first rule. And the third rule is go back to the first rule, preservation of capital.
Okay, so these are the most important consideration of any type of investments is preservation of capital. Since maybe some people will disagree with me, but all I can do is to voice my own opinion, and it is that the bitcoins and other exotic investments, so-called, they bought not very well with the idea of preservation of capital. In fact, I don't even consider Bitcoin or other coins as an investment vehicle. I consider that a speculation. It could be very lucrative. People can make tons of profits. They can make 1,000% in half an hour. I have no problems with that. But please don't call it an investment. It is not. So investment, first of all, what to qualify as an investment, and then we have rules and we have certain ways to proceed. Investment is something what we consider, it's a property, it's something of a value which can create a return, a certain return. So you have certain expectations of a profit with a possible risk. It's unfortunate, but it's impossible to avoid risk when you're doing investments. But the risk-reward ratio should be heavily in your favor. That's how you can create return on investment. That's how you can avoid losing money, or at least taking small losses. Sometimes it's a part of the investment, but again, you have to mitigate that. And you can eventually, at the end of the day, you will see that you have certain return on investment, certain profit. And I would estimate that what you're trying to achieve is at least 10% annual return. And 20-25% is not impossible. And if it's a normal functioning market, you should be able, with certain strategies, employing options, you should get to that number, 20-25% return. So last time we discussed options such as calls and puts. So on calls, we spent a little bit more time and we discussed that extensively. Jim, maybe you remind us anything what you remember about calls and one of the best known strategies employing calls. What would you tell us?
Well, one of the things that I remember is that if you own the stock, then you can use calls to hedge your investment and profit, even though the stock may not go up or down very much. So the idea of using options was a way to leverage your money so that you're not putting all of your money into the stock, but you're putting a fraction of the money and investing with the upside potential still there.
Okay, let me comment on that. Yeah, thanks, Jim. I will just make very short comment on that. When you're talking about investing a fraction of the money, you're talking about replacing stock with just calls. So you're buying calls, considering that probably stock will go much higher. But instead of investing, let's see if Tesla today is well over $1,000 a share. So to buy 100 shares, you need $100,000+. And it's still risky investment, believe it or not. Although some people believe that Tesla will go to 5,000 a share and 10,000 a share, and maybe to endless number of share. I mean, probably the sky is limit, or maybe not even the limit. Maybe there is no limit how far. Tesla today costs more than all American airlines and cruise ships and banks and everything put together. Is it realistic? Probably not, but please don't bet on it, because the speculators can drive the shares even higher. They can go from $1,000 a share to $2,000 a share and even $3,000 a share. Then it just could collapse. But the problem is that you will start bet against it and sell stock short, or sell calls, or some exotic things that you may do. You may not be there when the stock will collapse, but you're not there. You're already history. You don't want to do that, right? Okay, so let Tesla run as high as it can. Let's cheer for it, but be very careful with stocks like that. So another thing, if you remember what we discussed last session, the last program, that in all history of Chicago Board of Trade, which deals with options, from 1973 to 2020, so we're talking about history of 47 years. There was only 1 year where buyers of options beat the sellers of options. So 46 years, sellers were taking money from buyers, and only 1 year, buyers won. And you know which year was that? 1987, and it was a Black Monday, and Dow Jones plunged 522 points. So that was only 1 year when sellers lost to buyers. All 46 other years, sellers beat the buyers.
But Sasha, how can you sell what you don't have?
Okay, there is such a technique as a short sell. It can apply to stocks, to options, boats, calls, just anything, any financial instrument. There's a short sell. For example, today, let's see any stock. I think today Alibaba was very good, very well performing stock. It went up in price. I think it's now probably around $250 per share. It was just, I looked at it last time 3 weeks ago. It was 215. And I thought, okay, probably it will go to 230, but it will probably take some time. Well, I was wrong. The stock went very, very quickly. Actually, today it went up, I think, $15 a share. So even yesterday, I think it was close to 235, and it's today 250. So,
hey, Sasha, it's Mark. There's some people that are thinking that we're heading here in the United States to a depression, and I was just wondering, are there any stocks in your mind or industries that are quote unquote depression proof? Because I've heard that term used, and I do hear people thinking that we're heading either to a depression or a great recession. So I just wonder, if there are any stocks that are depression proof?
It's got questions. I don't think there is such thing as a depression proof, because as long as you're located in United States and the country is under depression or recession scenario, how you can have anything to be proved, except I think utilities probably still should do well. I would think that food businesses, not restaurants, of course, but my favorite stock is Costco. Costco is doing phenomenally well, and its business model, it's in parallel, because what they're basically doing, they're taking the fees from membership, they're selling membership fees,
Yeah.
become a member of the club, and guess what? They can sell everything almost at cost. So what they're doing, they're selling highest quality products practically at cost, but by collecting membership, they're already making so much profit that they don't need to make further even more profits on the goods that they sell. So this business model, it's incredible. The only other company I know of in Europe, it's a German company, Metro Cash and Carry, which has similar business model. That's the only one that I'm aware of. Maybe there are some others, but I know only one. But look how they're operating. Metro Cash and Carry then don't go to compete in US. They have all European and Asian markets. And Costco, they're doing so well in the United States. Okay, they're operating in Canada. I think they have some operations in UK. They started 2 stores in China about a few months ago. They're doing quite well. That's about it. So they're not competing with each other, if you know what I mean. So, Lynn?
Mine is muted.
Lynn, you're muted.
So Sasha, Jim asked the question about how can you sell something you don't have? And you were in the process of giving us the answer using Alibaba as an example. And I would like to hear you finish the answer that you were giving.
Okay, thank you. So in a day like today, when I saw that Alibaba went to $250 per share, and let's see, I think that as a contrarian, Jim, you like to be contrarian.
Yes, I do.
Okay. So as a contrarian, I think no. 250 is too high price. It cannot go. It's not real. I mean, in a day or two, it will go back to 30, maybe even lower. Okay. So what I do, I initiate short sell of Alibaba shares. Let's say I sell 100 shares short. What means that I don't have the shares. So my broker, I don't care, it's a discount broker, it could be TD Waterhouse or just any brokerage company. So they borrow that stock from their inventory. They have a lot of people who own Alibaba stock, so they're taking the shares. They deliver to whoever purchased that shares, and I initiated short sell. Now, there is a certain risk involved, because imagine that, just like I talked a minute ago about Tesla, the Alibaba will go to 275, $300 a share, 350, and you sold it at 250, and now at 350, somebody will ask you, please buy back your shares. You don't have enough margin to continue to hold to the shares. So now either you have to add cash to your account and continue to hold, but then you're incurring even larger risk because it continue to go higher. On the other hand, who knows, maybe you're right. The stock will go down in price and it will go down to your 250 or maybe you go to 230. Now you're generating profit at $20 per share. Okay, so this is you see, it's like in everywhere else. You have to understand your risk possibilities. You have to follow the trend. Right now, the trend for Alibaba to go higher. You don't want to fight the trend, even in you know that fundamentally, perhaps there is nothing that warrants such a high price. If you look at their revenue, you're looking at their profitability figures and all that stuff. Maybe there is nothing even to talk about. But Market believes that the shares are even at 250 undervalued. They will go to much higher level. Stay with the trend. Don't fight the trend. Although I did make one transaction today on Alibaba. What I did, I sold uh, puts and bought puts. So I believe that Alibaba in either scenario by Friday this week, which is July 10th, it will not going down to $220. It may go to 50, to 60, to 80. Maybe it will go down to 240, but it's not going to go down to 220 in 2 days. I almost exclude that possibility. I think it's almost zero scenario. Not really zero, but close to zero. Okay.
Wow.
So
Now, one of the things, I'm sorry. Now, one of the things that Kim talks about is the financial literacy and us trying to be financially more independent and things of that nature. I know that here, and I'm in North Carolina. I know here that a lot of people and throughout the United States, they're always buying lottery tickets. Now, it seems to me that what you're doing, stocks, is a much better way to actually do investments because you're actually got a good shot of making some money. Whereas a lottery ticket, yeah, you might make $1 million or $1 billion or whatever, but you got like a 1 in a billion chance.
It's a speculation, not an investment.
Exactly.
okay, I'll give you even better example. Many years ago, I went to Atlantic City with a friend of mine who's a doctor, and he wanted to spend the day in a casino. He was going through a messy divorce, and he wanted to claim that he lost $100,000 in the casino or so on. Okay, that's fine. I don't care. I just love to play in the casino. So we went there. So he wanted to play in slot machine. There was a giant slot machine which says the jackpot is now $250,000. It's a dollar slot machine, so the minimum bet is $1. And these dollars are huge. They're like that big, and they're heavy. So okay, so we changed $100. So we put it in the slot machine, lost all this $100. So he did it one more time, and then he wanted to do a third time around. Now, third time, I refused to participate, and you know why? I said it's a great fun, but the dollars are too big and too heavy, and it requires a lot of physical work for me to handle these dollars. I have to take all this stack of $100, which are very heavy. I have to put them in that slot. I have to then roll this handle, and I'm putting a lot of physical energy, and nobody is paying me for doing that. So I'm not only I'm throwing money away, but I'm also have to do the work, and nobody is really paying me for that work. So good luck to you with this all the slot. Continue to play as much as you want, but I will go to blackjack table. Now, the blackjack table is a different story. I understand more or less what's going on. So okay, it's a dealer who does the work. Okay.
The dealer does the work on that.
Actually,
So-
you don't even touch the cards. All you do, you just put the bets. But that's it. Okay. So I won very quickly a couple of $1,000, and so he came over to me and says, "Oh, you're doing so well. Let's go back to this machine, the slot machine. I give you here's $1,000. Please just go. I don't want to see you until you finish. Okay, go and enjoy."
So, Sasha, let's go back. Let's go back to the question again, you were giving the example of Alibaba and what you did with the two puts that you did today. So let's finish that example.
Okay, let me finish. Mark, let me finish this, and then you'll ask a question, okay?
Good.
Thank you.
Yeah.
Okay, so here's what's going on. If you believe that Alibaba will be $250, maybe a little bit lower, most likely higher, because it can be, of course, higher. You know. So you can take a chance, which I did in the morning today, when the market opened, that if my theory is right and the Alibaba will not go much lower than 250, then I will take a very small risk in 2 days, which is today is 8th and on Friday is 10th, that the stock will stay around 250, maybe a little bit lower, most likely probably higher. So from 250, I'm going down. I will take a put chain. I will go down all the way to say 230 puts. So the 230 puts, they are probably close to zero. There is very little value in them, right? So let's see, the bid is most likely 1 cent, the offer is 2 cents. Okay, I will buy on offer say 10 puts, but not because I think I will win. I don't want to win. I want to lose this bet. I want to win my other bet. My other bet is selling, but not 230, but say 240 puts, which have much higher value. Now I'm getting premium from these puts. They cost probably about 60, 70 cents a piece. So if I will send 10 puts, so I will generate income of say $700 with very little, but I need the other puts too, because it's my protection. If all of a sudden market will collapse, there will be a huge war between the US and China and everything will collapse or so on, I still have protection. So even if Alibaba will collapse down to 175 a share, because of that protection, my loss is limited to a difference between 240 and 220 or 230, whatever puts I bought. Okay? So now I'm playing a game when I have a very limited upside, but almost non-existing downside. So I locked in a process where it will generate to me almost a guaranteed cash with the protection. What if still I'm wrong and some calamity happen and I will lose this transaction, but my loss is still limited. Okay, so whenever you're operating with options, the right way of doing it's always spreads. You sell one position and you buy another position, so they offset each other. There are bullish spreads, there are bearish spreads. So that depends what's your strategy, what you think about the market. So this is now answering your question, Mark. It's very different activity from buying lottery tickets. Because in a lottery tickets, you don't have any control of outcome. You have no control. There is no fun. There is no process even to think of. Even in a poker, there is a process. There is no game. There is no playing process in poker. But at least there are 2 cards, there are 5 cards on the table. At least there's some kind of something is going on. Now in the lottery, nothing is going on really. I mean, it's furthermore, you have to check the results of a lottery. So you have to go to next day newspaper, or you have to watch internet. So you still have to spend a lot of energy to pursue this absolutely incredibly stupid transaction, and you have to waste your time and money as well. I mean,
That's so true.
Last week you asked us to think about some questions that we would have, and I've got a few that I would like to run by you.
please do.
One is if I say I have $5,000, I open a brokerage account, can I buy options right away?
No,
No.
I told you that 46 years out of 47, the buyers of options lost.
Right.
Why you want to be one of those losers?
Okay, can I buy sells then right away?
If you bought with $5,000, you can easily do spreads, similar to what I've just described as Alibaba, but it could be different. It could be, for example, this is a bullish spread because I believe that the stock will go higher, or maybe stay the same, or maybe go slightly lower. But so my mind is in a bullish territory, and I would call that as a bullish spread. But let's see, a Tesla went to astronomical high, and you happen to, as a contrarian, that no, that's it, enough of the madness. Okay, now Tesla will not go much higher than it's already there, so you want to initiate a bearish spread. Okay, so let's see, what's Tesla today? Thousand, probably $1,200 maybe already. You know, well, I'm just curious myself. Let me just take a look. Yeah, Tesla.
Well, Sasha's looking that up. Hey, Lynn, can we get stock in the Family Dollar store?
Okay, believe it or not, Tesla is $1,385.86. It's down $4 today.
It's down $4 today.
This is down $4. Oh my God. Okay, so here's you saying that okay, enough madness. It's gonna go on forever. So now, okay, hell with it. You decided, hell with it. You're prepared to lose a couple of $100, but you just hate to see it going higher and higher and higher. So just for the fun of it, why not to, for example, sell $1,500 a share, 1,500 call you sell, but you're also buying 1,600 call or 1,550, something way out of the money. It's much cheaper than 1,500. So if you're right and stock will not achieve 1,500 in next, say, 1 week, let's say we talk time period of 1 week from now, and you're right, so you will collect that premium and you'll make a little bit of money on Tesla, but not because you hold Tesla stocks, but as a contrarian. So you figured out it went too far, too fast, and you initiated the trade. And also because it's a spread, you cushioned your downside if you are not right, and Tesla went to 2,000 a share, 5,000 a share, or something else, you have limited the loss. You will lose money on this transaction, but it's limited by the difference between what you collected, from call you sold and calls that you will make money on once it's initiated.
Hey, Sasha, I was joking with Lynn, but do you suggest better public or private stocks? Like I was joking with Lynn whether he had stocks or not in the Family Dollar store, but I've heard that term, public and private companies. Which do you think are the better ones to invest in? Because I know some companies are greater public companies and there's some that are more private.
Well, this is like what's better, apples or oranges? You tell me. Obviously, basically, they are companies. They have their stock issued. The only difference is that publicly trading stocks, they are publicly trading stocks, and privately held stock is not tradable. It's still, you can still sell. You can sell to your friends or members, family members, and so on, and pay yourself dividends. There's no crucial difference between public stock and private, except that public stock is tradable. That's the only difference.
Well, Sasha, I also want to say that the idea of depression-proof or recession-proof, we don't have good ideas, but you recommended dividends, stocks that have dividends, and so then if you hold these stocks and the economy goes south, they're still paying you dividends. We hope. So,
yes, as I said before, I'm a very greedy person, and that's why I'm trying to select dividend-paying stocks. Because you know what's the difference between non-paying dividend stock and stocks that are paying dividends? The difference is that in one case you don't collect money, and in second case you do collect money. So if you are a person like myself, happen to be a little bit greedy, not as much as I am greedy, but just a little bit greedy, then then you always will select dividend-paying stocks. And regardless, I hold many different stocks and options, but a core of my holdings always is dividend-paying stocks. And today you do have some stocks, like I never sold one only stock. I always hold. It's an Altria Group. It's used to be a Philip Morris, and they're paying 7.5% dividends. Now, where else you can go on a market and to buy even bonds or any security that will pay you 7.5%? You tell me, maybe I'm missing something. But and they're paying. I think they're paying dividends for the last 48 years, and they just keep increasing actually dividends. And it wasn't as large before this market crash. Their dividends was only, I think, 6-something%, but because they went down in price since all market collapsed. So now their yield increased to 7.5%. I think it will go somewhat higher in price. So it will, in a few months from now, it will keep paying probably 6.5%, because the stock will go higher in price. So obviously their dividend yield will go lower. So we will come back to, but still 6.5, it's still respectable rate of interest.
Sasha, do you know the term widow stock? I don't know if growing up in Odessa or in Canada you use that term, but we use that term. And
Utilities. Yeah, probably utilities mostly. Some IBM used to be widow stock, right?
Right. But there was the dividends. It was so that the widow wouldn't have to worry about stock market fluctuations, but that she would count, or he or she would count on the dividends.
Well, if she wants to not to worry about her investment positions, she should remarry, and very quickly.
Great answer, Sasha. Well, what's the minimum that somebody can invest? You asked me earlier when we first got on what kind of investments I've done, and like I said, I've got some insurance that is for my nephews. So something happened to me tomorrow, and it's still got to build up. So hopefully it doesn't happen tomorrow because they won't get much. And then when I was a kid, my grandma got me bonds. I had an emergency, so I cashed those bonds, or my mom cashed those bonds, as I recall. So I don't think those bonds are still in my name, but just out of curiosity, what is the minimum somebody can invest, and what do you think of bonds?
Okay, well, bonds is these days it used to be always recommended to mix between cash, bonds, and stocks.
That's what I learned.
It's a classical model, and there's nothing new, I'll tell you, except one thing. Today, cash and bonds
Pay nothing.
are bringing almost the same rate of return, which is zero. They pay nothing. So therefore, I'm very disillusioned. I'd rather buy stock like Altria Group, paying 7.5%, that invest into bonds or cash. As if you still want to have some cash, as I said yesterday on one of the programs, it's better to buy gold shares, because you see, with U.S. issuing so many trillions of dollars of incurring more and more debts, I think the cash has to look for some new vehicles to be parked at. And I'm not sure what it is. It could be a Swiss franc, or maybe Japanese yen, or maybe even Russian ruble, which is very exotic way to invest, and I don't recommend it to anybody, and I will never touch it myself. However, some people believe that, oh, go into Russian ruble. Okay, good luck. But there is one material which is purchased by almost any governments, any countries. This is gold. Any country, starting from China and going anywhere, they are hoarding incredible amounts of gold. And there is one more important thing. Remember what Warren Buffett said when somebody asked him if US can go bankrupt by issuing more and more and more debts. So Warren Buffett says, how the only country in the world that can issue US dollars can go bankrupt? It's just impossible. And he's right. It is impossible. But the more and more and more debts are being issued, that devalues dollar against other currencies, whether it's a British pound or Swiss franc or so on. That's logical. I mean, any schoolboy will tell you exactly that. But if that's the case, then gold doesn't even have to go higher in price against US dollar. What has to happen is the dollar will go lower, and then the gold, by staying on the same place, it will automatically go up against US dollar.
And here's the
go ahead.
I was just going to say the other problem with investing in bonds with interest rates at 0.5% or 1%. Basically, when interest rates start to go up, the value of the bonds will go down. And so you will actually take a significant loss in your, and if we go back to the 3 rules that Jim was talking about at the beginning, preserve your capital, and if you can't do either one of those 2, preserve your capital. And so the point is bonds to me, and there may be ways to speculate in bonds. I won't, and I'm sure you know more about that than I. But bonds, just as a general investment today, it's sort of like for years I was in the real estate investment business, and we bought apartments. And the way you bought apartments was based upon cap rates, and the cap rates are effectively the same as interest rates on bonds. Okay, well, all of a sudden, apartments became very, very much in demand. And so instead of buying them, when I was buying them at 8 to 10% cap rates, today people are buying them at 4 to 5% cap rates. And I'm thinking to myself, you're going to lose money, because 10 years from now, interest rates may very well be back up to 8 to 10%. And you know, if you bought at a 4% cap rate and you sell, and now you have an 8% cap rate, and you spend $1 million, all of a sudden your million is worth $500,000. So you have to be really careful. Bonds and a lot of investments. Remember, I mean, at least this is what I learned: as interest rates go up, value goes down. As value goes up, interest rates go down.
Absolutely.
I'm glad you brought that up, Lynn, because that was my other question for Sasha. I'm sorry, I'm running a lot, so I got a lot of questions. So my question I had for him was, I know a lot of people here in the Carolinas, because we've got a lot, and it's throughout the United States, we've got a lot of gentrification and a lot of houses that need to be developed. So people are developing houses. They're buying the houses that are in bad neighborhoods, fixing the houses up, and then flipping them. So they're selling them at a profit. So I was wondering, how do you think about that as an investment opportunity, or as an investment that would you do something like that, Alexander? Because like I said, I know a lot of people here, that's what they're doing. They're basically flipping houses.
Okay, I'll tell you one thing.
All over the country.
I hate real estate. I've made a lot of money in real estate, but I hate it. It's boring. You know, I just don't enjoy the process.
Yeah, I know.
Don't.
That hurts.
That hurts. Hold up a Yankee cap.
That hurts. I have to put on what. I love real estate. I love the whole concept of making a deal with somebody. It hurts.
But Lynn, when our parents say that when we not necessarily in our lifetimes, but in their lifetimes, a sign of being wealthy was to be clipping bonds, clipping the owners.
Sure.
So, but the times have changed now.
Absolutely.
Absolutely.
And I understand where Sasha's coming from. I mean, you know, it is what it is.
Listen, all respect, with all due respect, if you love real estate, there is no problem with that. Real estate, as a rule, is a very profitable investment. And as I tell you before, I made a lot of money in real estate. The reason that I don't like it, because it's very boring. It's not, there is not liquidity. You know, for example, I saw the gold as an opportunity. So I bought the gold stock. I didn't, you know, like in 20 years ago, I would have to call to my broker and tell him what I want to do and so on. But they don't do that. You just click a mouse and that's it. And you got, say, 10,000 shares of Barrick Gold. Then you sell your next move. You sold 10 calls of Barrick Gold, which expired next Friday. So you already locked in profit, and you see. But you know what? Sometimes even 1 week is too long. But still, okay, 1 week I can wait. Okay.
But you know, Sasha, basically, what you're saying is you don't like long time controls. You like blitz chess because you know this is not interesting to you. You like action, and
you see this. Okay, with the, for example, like I just explained a minute ago about my thoughts about gold against other currencies, particularly US dollars. So there are certain assumptions and there are certain models that I'm trying to build and follow up. In real estate, what kind of a model you're building to pursue this or that real estate investment? Basically, the main ingredient, in my opinion, it's time. So with the time, as a place becoming more populated, people are coming from other places in this place. So the more real estate is becoming in demand, and whatever you hold on to, land or apartments or house or whatever it might be, it will grow in demand, and you will sell eventually. There are few things that are unknown though. Is uh, how much time would have to go by because before this all the sizable expenses, whether it's
Yeah.
legal expenses and many others, you will realize enough to offset all your expenses and make a profit. The good thing in real estate, there is a leverage because obviously if you're
Right,
buying
right,
land,
right.
okay, you don't invest say $500,000, you invest only a fraction of that, maybe 25,000, maybe even less, and you carry on as a very cheap interest rate, so it doesn't really cost you anything significant. So you just carry it on and so on.
But
On the
Sasha,
other hand, there are all yes.
Sasha, I'm sorry to interrupt you. I just said that the real estate approach that Lynn is taking is one of an investor. And what Mark was talking about flipping houses, that sounds like a speculator to me.
Yeah, of course, of course. But you know what? I can't really make a clear divide between investor and speculator. Because as I said before, let's see if I bought the same barrick gold and I paid, how much I paid? $35 a share, and today is already $37 a share, right? And again, as in real estate, I'm buying shares on margin. I put only, I don't put all amount right away. I
Right,
put
right.
only one third and sometimes only a quarter of the. So if you put only a quarter as a margin and you bought stock and it went even just $2, so it went 7.5%, but you multiplied by four, so
Right.
you made 28% in 2 days. Okay, now
Hmm.
you're thinking about something. Ah, why don't I sell it and make 28% in 2 days? What's wrong with that? People are struggling to make 5% a year, and here I
Right.
make 28 in 2 days. Now, if I do exactly that, am I investor or speculator? And you know what I'll tell you? It doesn't matter.
Just as long
Yes,
as you
that's
preserve your
true.
capital.
And just to be
You
fair
can call
in the
yourself
statements and everything, the reason
you
I
can
was
call
asking is
yourself
because one of the
anything
worst
you
mistakes
wish.
I ever made, and this was me that made the mistake, was my mom bought a house in Durham, and she bought a house for basically me and my younger brother. We let the house get deteriorated. My brother used it first as a party house. I let the other house get deteriorated. So at some point, the house was not in the best of shape. So mom actually wound up selling the house at a loss. I mean, she did make some money, but she wound up selling the house at a loss compared to what she bought it for originally. So I actually have that kind of personal experience in having done that. Because, like I said, mom bought it because she was at the time we were driving. As all of you folks that are parents can understand this, and I'm 58 now. So, but at the time I was a younger man and everything. So I was driving my dad crazy. And I'm sure my younger brother was driving my dad crazy as well. So she decided to buy a house so that we would not drive dad crazy. So ironically, the house was about a block from dad. So we were still able to drive him crazy. But the
Yep.
purpose of the house was for us to have our own property. And like I said, whether it was my fault in terms of not taking care of the house or my brother's fault or him having it in a party house or whatever, the house was not taken care of. So
Was not a
eventually
good investment.
sold at a loss.
And a lot of people they end up getting homes, and that becomes their investment and win, right? You buy people who will go out and buy houses to flip, right? And I did a lot of research and homework. Again, I know you guys pick on me about how much do you read, Kim.
Yeah.
I've got book after book and classes that I
Yeah.
took. I thought, wow, that would be cool to go out and invest in property that was being foreclosed on for tax purposes. And I did a big research on this because it's different in every state. And but if you buy the property because it is in a distressed situation, and you get it at a discount rate because of the distressed situation, you might not have gotten a good deal, because a lot of times there's so much back taxes paid on it. You can't get you owe so much, and they don't have to disclose that. They don't have to disclose how much back taxes there are. So if you don't know how to do your homework when you buy the distressed property, you can definitely get burned. I know, right? But a lot of
You
people
really
don't
get
know
burned.
this.
And even to come back to your point, that's actually what did happen. Like I said, I don't remember the exact figures, but let's say it was a relatively not that expensive house. But let's say that by the time mom sold it, she sold it for like 75,000. I still have Zillow, so I had the rate of what the house was on my accounts and everything. And I think that after they fixed it, it's now like worth 100 to 110, 125. So they actually did make a profit back so far. Like I said, if they sell it or there's something happen with the market, they may actually wind up losing it. But the people that bought the house, they did the renovations that need to be done to the house. I want to even say they might have even turned it into like a duplex, but they have made it into something that is worthwhile to them and everything. And I haven't had the pleasure of talking to them. I know mom has, and I think my younger brother has, but as best I can tell, it does look like they have flipped it and made a profit on it so far.
Well, and there are a lot of TV shows that kind of made it look glamorous and fun, and you can do it in 2 weeks. And that's not true unless you have a team. But I knew a lady who did this in Charlotte. But the big key was to not just buy it in distress, but make sure that when you're buying it, that the people didn't have a backlog of taxes.
Yes.
So every year in January, there's an article that comes out in the newspaper, and I measure our economy on this. It's how many houses are under tax collection, right? And how many properties. And I kid you not, one year I went through there, and you know how tiny each little item is listed, right?
Yeah.
10 pages, newspaper pages of houses that were being sold for tax reasons. That's, really, if anything, pay that off. But that's the cheapest way to buy the homes, if you're going to buy them in investment, is to buy them out of tax auction. Don't buy them out of distress auction, because you're going to end up spending a lot of money repairing them, fixing them, making them meet code. I've seen people buy them and they have to redig ditches into the pipes and redo the gas lines, and you're $50,000-$60,000 in the hole before you get started. Then sometimes you owe the taxes, and let me tell you what, they're going to come get that. But what they cannot do is come take the home away from you. If the tax auditor sold it to you, they cannot come take the home away from that person if there's money owed on the mortgage. See, a lot of people don't know this.
I don't know.
Yeah,
But if you bought it because the mortgage was selling it, because the mortgage repossessed and it was distressed, if you bought it because the mortgage repossessed it, but taxes were due, the tax man can come take it away from you if you don't pay them.
Mhm.
So there's this really trickiness to all of this game that you need to research and learn how to do. And I spent a year purely, and I was always just a little too scared to go out and just do it on my own. But one of my worst investments ever was my first, which was in real estate properties. A group was going around selling hotels being built, probably Trump, and taking your money, and they would send you these things. Oh, we're breaking ground today. Oh, we're doing this. They never did a damn thing, except take our money. And I never saw a dime from the investment.
Kimberly, I'll get off of real estate in just a minute because we're boring Sasha.
No, and I actually wanted to get back to that. We get off of real estate, but I can relate to what you're saying, Kim, because I actually had somebody from Las Vegas do the same thing. They approached me about some new hotel they were building. But Sasha, my question for you, and this comes back to what we're talking about, because you're very much about investments, and I need to get some investment. I'm getting older, so investing for myself, but also for my younger nephews. They're about to be 11 and 12 in August. I told you I bought some insurance because that's what the insurance agent said I should do, and I needed to put somebody down as a that would inherit the money should something happen to me after I've invested a little bit of money over the course of the years. But in your mind, because I told you that when I was a kid, bonds was what my grandma gave me. But in your mind, what is the best investment that I can give my young nephew that is 11 and 12? So I need to find some investments that I can give to them, maybe as an investment. And I don't know whether that's a stock. I don't know what that is. But what would you recommend that I invest for my nephews. I don't have any kids, but I do love my nephews.
Okay. Question number one: what is the amount of capital that you're planning to invest for them?
Let's start off. I mean, what's the cheapest amount I can get that they would get a good return? So, like, if I invested, let's say that they're 11 and 12 next month in August. So let's just pick a figure out of the air. If I was to invest $100 by the time they turn 20, how much would that be worth?
$100 a year, or $100 now, or
$100 now.
$100?
Yeah. And then, like I said, we're talking 9 years from now because they won't be like past college age till
I'm
let's
not
say 10
sure
years.
what you can do with $100. I mean, maybe you can buy them ice cream and something. Take them to a park, to a water park, maybe. I really don't know what to tell you. Also, don't forget, I'm not financial advisor. I'm not giving people advices of what to do and how to do. I'm sharing my experience as an investor. Oh, by the way, speaking about the real estate, one of the best real estate deals was in Toronto about 6 years ago when one very well in demand property, it was hotel condominium property, right in the center of Toronto, was sold 10 cents on the dollar. You know
Yep.
what's the name of the development was? Trump Tower.
Mm-hmm. Yeah.
Big
there
as
you go,
much.
right? Trump
So
Tower.
what about $1,000? I'll go up. Just tell me how much.
Let's talk about this investment opportunity. So something I learned a long time ago is, if you want to make really big money off of this, maybe teach the kids, right? Just like if you want to teach the kids how to eat forever, do you give them food or do you give them a fishing pole, right?
Yeah.
So I think too, what Sasha's trying to say is maybe teach them how to do it themselves. But like we watched the paperclip trading game. I don't know if anyone watched that video that Ankit played the other day. Sasha did. But somebody traded a paperclip and then they kept trading and got the house, right? So maybe teach the children to take the $100 and do something with it, like maybe go sell lemonade on the corner, or do something on eBay, right? Buy something and trade it. And then trade that. Teach them how to trade, how to get out there and hustle and trade. Maybe that $100 could be taught to do that. One of the things I do for my kids in graduation, and I don't know, I know how many of them actually read the book. I get them the book Rich Dad Poor Dad, and I put a $100 bill in it somewhere. And I don't tell them there's a $100 bill in it. If they're watching the show today, they're going to know, oh my God, there's a $100 bill in the book.
Cat's out of the bag.
But anyway, what was interesting to me was when I spoke with someone who taught to teens financial literacy programs, like that's a program he built in his community. That was one of the books that every one of those kids read. I interviewed them on our TV show, the children who were at the financial literacy program for children. And they all read that book and they could talk to me about it. I'm like, oh my God, I read that book in my 40s. Okay. I asked myself one day, what would I have been like if I had read that book when I was 10? Right.
And don't underestimate the kids.
I would have traded my Barbie dolls in for something, right? I would have looked at every item I had differently as how. So take a thought in that when you got that $100 bill and you want to give it to those kids. It's what we teach them to do with the money, and sometimes not you investing it. But like Sasha's talking about, like we're having this conversation, maybe make them sit down and have a conversation. What would you do with this $100?
Yep.
And I'm going to get that board game out where I'm building that board game where it teaches you how to do a ledger. And it's all about doing that. What would you do if you had this money and how would you spend it? And at the top, you write a dream. What do you want, right? What do you want to get? How much does it cost? So, but I think I wish I sat down more with my kids and said, what would you do with this?
Yep.
Okay, I'll give you another example of what you can try to do. I had a good friend of mine. He's a lawyer, And he was investing with his friends in the commercial syndicates where they would buy property and they would actually all they were doing, they were changing zoning and then they would flip it. But there were 11 people. So 10 of them, they had to fork up 20,000, 30,000 each. Now, he as a lawyer, he didn't put anything because he was doing all the legal work and so on. So his investment was actually his work. So if your nephew would approach 10 friends and each of them would invest $200, but your nephew would invest only 100 and another 100 would be credited for him to organizing and figure out which investment to do or so on. So now you would end up with probably a couple of $1,000 worth of cash. Now for a couple of $1,000 you can probably buy even this bloody General Electric stock or maybe something else. Oh no, you can sell calls.
There you go.
Actually, I'm wrestling now with the idea. See, General Electric,
But he's
it's
putting in
about
sweat equity.
it's about the same level where I bought it, but the calls, now I can buy them all back, making $3,500 profit. But I would lose my protection. So if I will keep them going on until November 20th, then I will grab $6,000. So I'm not sure if I should live on a table $2,500. I'm not sure. Maybe not.
You
Well,
know,
Sasha, I've got a question for you because it's my first question to you. I didn't get a
Correct.
chance to finish it because we were talking
Jim,
about.
before you do that, because I've got to bounce, I would give because I've got to do a special show with somebody about success. So I'm going to do that with JB the Wizard. He claims he knows success and everything. So I'm going to see if he knows as much as Sasha. So I'm going to go bounce out and everything. So I'm going to let you take over that. I think I might decide to invest in the mower behind me because my landlord has been mowing. I think that's what y'all been hearing a little bit in the background. So I might invest in the mower in the background.
Okay, all right, Mark. I've got some advice for your nephews too. So
Thank you.
we'll touch up later.
All right.
Okay.
Okay, one more thing what I'd like to mention. I think we were about to wrap up soon. One more thing. When you are buying stocks or options and selling them or whatever, you don't do any due diligence whether there are back taxes unpaid or whether it's no creditors are there or whatever. You don't need all that. You just do a click, you got stock or option or something. You decided to sell, you sold it, the end of story. No due diligence, no nothing, no legal expenses, absolutely no nothing. That's
All
a crucial difference between investments in stocks and bonds or whatever, cash, and real estate. And but I said real estate is a wonderful thing. If
it is.
you're blessed, you can
Sasha, I
do
want
very
to
well.
get my question answered though, because I started the show with this question. I take $5,000 into a brokerage account and I start to sell or call puts or calls, and then all of a sudden it goes wrong. And just a minute, and when it goes wrong, I'm out of money. So the brokerage system would not allow me to do that. They must have some protection against the guy coming in, losing all his money and going away.
Absolutely. In fact, they have such a layered protection. They won't allow most of the transactions. It's $5,000 account. They won't even allow you to initiate. In fact, they will first vet you whether you have options experience and what's your investment experience overall, or so on. There will be so many things that, at the best case scenario, if your answers are satisfactory, everything is fine. Um, they will allow you most likely to operate with spreads. You can sell or buy spreads. And in fact, it's to your advantage because in spreads you have much less risk than if you're doing naked position, whether calls or puts or just anything. In fact, before I forgot what I wanted to mention about puts, one very well-known strategy when you sell the puts. As you know, my strategy is always to sell, never to buy, always to sell. Let's say you have, okay, buried gold trading now probably $27 a share. You would like to buy that stock, but to pay today $27, it was 2 days ago only $25. So you feel it's not fair deal because you're buying today, not 2 days before. Now you have to pay more money. You don't think that it will be $29 in about 2 3 days. No, you get stuck with, okay, I want to get it for $25. I don't want to pay 27. There is a way to do it. There is a way to do it. Actually, two ways. One way, instant, and another one is taking a little bit longer time. So if you today sell, let's see, October 25 puts, you will generate income of about $2 3, depends what they're pricing it now. What that means, if stock will be $25 or higher, you keep the premium. As I said, 46 years out of 47, the purchaser took beating. The sellers got all the money. So now you got this money, it's yours. Go enjoy yourself, take a trip to Las Vegas. What else can you do with this money? Or whatever. Now, if the stock still will go down to $25 or lower, then whoever bought the put will exercise it, and you will be forced to buy that shares at $25. But wasn't it what you were planning to do anyway? You wanted to buy stock at $25. It's all yours. Enjoy. You got it. Another thing is, but you see, you have to wait a certain period of time for the options to expire or be exercised or whatever. Now, one thing what you can do instantly now, today, stock is 27, buy stock at 27 and sell covered call at 27. You will generate probably $2 3 premium. So your effective price, what you pay for a stock, 25 or maybe even less. Okay, so you did this. There are two ways of doing that, but you can employ other one. Remember that to sell this puts, what I've described before, you still need a margin enough which would allow you to buy so many shares at $25.
Right.
So you can do it with 5,000 account, 5,000. It's just not enough. You need a little bit more. Not
Right.
much, not much more, because you will buy it on at $25. You'll buy it on margin, so you don't need full amount of whatever stock is. You need probably another $2 3,000, and you can do it.
Yeah.
Okay.
Well, I learned a lot, and I think Mark is also learning a lot. And so you get very excited, and you start asking questions. And I thank you for answering that question to me, because I do have enough capital, I think, to get involved in the options. And because one of the things the way I was taught was to be a long-term investor, and you're not big on long-term investors. And there's a way to, and Warren Buffett, which you mentioned earlier, he had this expression that said, a diversification is panacea for the ignorant. And I was trained to diversify my investments, and you're not a big fan of that either. So I'm
No,
learning a great
no.
deal from your shows, Sasha. Thank you very much.
The diversification is for losers.
Oh, geez.
Well, it's for people who don't know how.
That's
to
what
do this.
that's
It's
what
pretty-
Warren
it-
Buffett was saying.
So I give everything to a financial advisor, because at the end of the day, my brain starts to hurt. And there are some things I thoroughly enjoy reading on. Yeah, that's right. I need, and this is what I told Sasha. I really love listening to your show, but you really don't want me coming on and talking, because I get really boring when I talk about financial investing, because I get scared. Like, that's where I get a little afraid. Now, if I go to the racetrack, I know I got $100 or $50 that I'm going to play with, and it's over. It's done. I had fun. But when you're talking about investing, to me, it's a win or lose game, and I don't like to lose in my investing money, and it's
Preservation of
always
capital.
nervous, right? So I always hired somebody to do this for me, and I'm going to tell you what, I have taken classes in it. I have forced myself to go to seminars. and sit and listen and do, and I do the homework, and I still just never feel. So maybe just sitting in on these conversations like a coffee shop, like I told Nick, I learned so much off stage when we're just sitting around and we're just chatting about it,
Yeah.
that I wish I'd had this my whole life. So maybe sitting around here just casually talking about it will allow me to gain a little bit of confidence.
Courage
To,
of your convictions. And Sasha has that coming out of his ears.
right. But sometimes it helps to have that mentor, right? I'm going to be honest, I've never had a mentor in this area. And maybe this is what it has taken, is a mentor. And again, I have done all the homework to go out and buy houses off auctions.
I'm
I
sure
can
you.
probably do it better than anybody, but I don't, because I still see it as too risky, too much involved. And I know people, and I've done interviews, magazine interviews of people, I've got them, of people who did it successfully. And you know what? Not one of them did it the same way.
Right.
But the only formula I found consistent in buying houses and either flipping them or renting them, most of them would buy and rent, is the number 10 was the break even. And what I mean by break even is when they both reached 10 houses, they could quit their other jobs.
Oh, I see.
And then the third person I interviewed, and I never got him in our magazine, it was the same thing. But they didn't realize I put this together, right? And they didn't know each other. None of these guys knew each other. They all had a little bit of a similar formula, but they all still did everything very diverse, very different. But the common denominator was the 10th home.
Well, Kimberly, you sound a little risk adverse to me, and you got to get more greedy, like Sasha is greedy. And
You know what? It's not even so much money you make in the stocks or options trading. It's a fact when you see green on your screen, and you know
Right now, with that $100
it reminds me very much of a chess game. In a chess game, okay, here's a winner, here is a loser, and it's accepted practice. But in the stocks, the same thing.
you don't want to see the red.
No, but you're talking about overall stocks picture. I mean, it's not your stocks that you're losing so much or so. Let's say on any particular position, you're taking this position, you immediately see green on your position. So you know now, okay, you're now making money. So now you have two questions. One, how much money and how quickly? This is very important because to make money quickly is just as important as how much money you are making, because the quicker money you are making, the more opportunities you have going to different positions and doing something else. Or sometimes I exit position, wait a little bit, and playing reverse side of the same position, but on the reverse side.
Right.
If I think that stock went maybe a little bit too far and too quickly, maybe there will be a reversal or so on. Of course, with the market is very nervous right now. You know, I call it now operation to save the Saint Donald, or how you want it, or Private Donald. How
Private Donald. So
saving Private
Yes,
Donald.
Right.
That's what market is trying to do right now. So it will continue most likely to go higher in the foreseeable future, but it's not going to go on forever. So you know that at one point it will go, just keep going higher and higher and higher and higher and higher, but it's not going to go on higher forever.
And never play without money you can lose. You know, it's got to be discretionary. You don't bet your money.
No. My plan is when it will be a reversal to win even way more money than I won already. Because if I will be right on the reversal and my timing, that is why I'm playing always the spreads. I'm not taking the naked position saying market will go higher or market will go lower. I'm always hedged. I don't have unhedged position. Even my what it's like Altria Group, for example, I'm selling covered calls against it. So not only I collect dividends, but I also collecting premium on covered calls. So there are three ingredients: the stock itself, the healthy dividend of 7.5%, plus I'm generating income by selling calls every 2-3 months. So sometimes I roll them over. For example, one call is expiring, I close a position and initiating selling of a new calls. But always covered. I never sell uncovered calls. Always
Something
covered.
I recognize too with people who have been very successful over the years in stock trading is they do it every day. It is a discipline of everyday practice. Even if you're not one to invest and do a lot, they read it every day. They track it. Everybody has their own algorithm system. I notice Sasha does this every day, but every day you're checking it. Every day you're doing your homework. It's like a gardener, right? If you want to keep the weeds out of your garden, the garden will see the gardener's shadow every day. So stock trading is the same thing. One of the things my first financial advisor taught me, because he knew I loved my other work, is he said, so he told me, he goes, give me your money and don't look at it every year. Now I look
That's
at it
that's
every
fun.
month. But I
That's
looked
a
at it, but this is what he told me. He said, over the course of your lifetime, you're gonna see it do this. He goes, Kim, go back and read history. You're gonna see stock crash, but it came back. People who didn't panic, this is what he told me, people who didn't panic recovered, right? And you may not always win, but you will if you're calm about it. Odds are you'll recover. So I learned that habit, and I didn't turn gray and lose my hair over that. I did turn gray and lose my hair over other things, but um, that was just too nerve wracking for me to do on a daily basis because I knew that's what he did. But honestly, maybe as I'm nearing my third or fourth retirement, maybe this is something I can learn how to do because I've done all the homework. It's just I've not wanted to been one to want to sit in front of it every day and read it. I just, but I know that that's what you have. One of the disciplines you need, right, Sasha?
Well, I do reading simply for my enjoyment. I don't follow, and as I said before, I don't recommend to study all about the single stocks that you're thinking of buying or selling or whatever, because after all said and done, you will know just as much as all other traders and investors or so on. So, where's your edge? You have none by
Mhm.
reading and going through and reading all these
You know,
materials, going to internet, go to library, go
Which
whatever
I
you
did.
are doing, it doesn't mean a thing to me.
no,
All you do is just, just as much as everybody else. So what's an age? Well, why to do
you know
that?
what I see this like, Sasha? I see this like guessing the next move.
That's
Actually, you hit it right.
right.
I see this
Well,
guessing.
absolutely. Yes, there is a lot of things to do it. There are differences, of course, too. But the most important thing is, you see, market is kind of a perfect mechanism of going through heads of so many traders, investors, mutual funds managers, individual investors, speculators, and all this stuff. It's kind of a collective wisdom. So if today, um, let's see, Barrick Gold today is $27 a share, that's a collective wisdom of the market that it is worth today. Penny said it was yesterday, no, 2 days before it was $25 a share. Market was right. 2 days ago it was $25. Today is 27. What's going to happen? What's happened? Why Barrick became so much more valuable? Almost 10% more valuable than 2 days ago. Market said so. So the collective wisdom, and you don't fight the market. Market
Don't
always right. So in a
don't
way,
fight the trend.
the principles of a Confucius philosophy is that you don't go faster than the flow or slower than the flow. You become a part of the flow. You are the flow. You don't fight. You don't go ahead, like against the flow or for the flow or faster than the flow. You have to become a flow yourself. So you have to become part of the flow. Those people who can achieve that, they're very successful in stocks. They don't listen conventional wisdom. Oh, this is a great company. They pay dividends and they have a great CEO and they have great board. and they got now a new board member, and it's all worth nothing.
Yeah.
The
And so,
market is
question.
always right.
Let's do something here because I always believe in beginning with just the diehard basics. I do things so elementary that they pick on me in the cybersecurity world that I'm too elementary. But so here's the thing: I'm a newbie. All right, I've always let my financial advisor do me. What's the first thing I need to do if I want to hang out in this club? I need to register somewhere to be able to, yeah, I need some money set aside. I need to kind of do my own financial planning and stuff like that. But what is my first step? I want to get out there. I want to do this.
Open trading accounts. Go to just any online brokerage. You don't have to go anywhere. Just go online, type brokerage account. There are now a lot of brokerage in US. They're offering commission-free trading. You
yes,
don't pay commissions.
that's right.
Ameritrade, I think, E-Trade, possibly.
E-Trade, baby.
Which one?
The what
Trade
crashed through because they used to make their money on the trade. They every time you made a trade, they made money, and now it's commission free. So just get an online brokerage account,
Okay.
get started, and now you can trade without commissions. So they're still making the money because they're holding your money, but that's a different ball game.
Not only that, they're selling the order flow. They're selling to other firms, and they're making money.
Absolutely.
But that's neither here nor there.
Right.
Just open account, deposit some money, and we'll go from there. I would love to provide you with whatever advice I can. Yeah, be very consistent. Be very. But you see, you have to build up your mind that there are trillions of dollars trading every day in stocks and all kind of options and mechanisms and so on. Oh, you're trying to get your couple of $1,000 here and there every day. That's all. You're not trying to make millions and billions of dollars. You're trying just to get by little few hundreds here, couple of thousand there. So you're not trying to become a winner of $1 billion empire. So no, it's a little bit step-by-step process. But once it's consistent, you will enjoy it.
Who wants to be a stock millionaire?
Who wants to be a stock trading? So I think this is a good way to start, right? So we got our club, we get a club going, we invite other people to join the club. I remember a friend of mine, that's what they would do on Friday nights with the neighbors. They had I wasn't part of there. I lived on the other side of town, but they would get together every Friday night, like playing poker. Maybe they did play some card games, but then they would get out and do some trading together as a group, right? It was really cool to listen to them talk about this, right? Nothing magnificent, but maybe enough to pay for vacations or, just fun, but they were having fun together. And I've heard about that, but maybe we've got our little club here.
Absolutely.
And we'll talk about that.
No problem with that.
I'll go register. What if, so I'm going to go register and get my account set up. And I'm going to learn, I'm going to start my little disciplines of, maybe 15 minutes a day. I apply myself to it like a gardener would in the garden, right? I'm not going to have much more than 15 minutes a day. But
use discretionary money. Let your financial person take care of your real money. But this is discretionary money. You can lose it all and you won't care.
Kim didn't get to go to the horse track this year, so she's going to take. She's going to take her horseback money, and it ain't that much. But because it was kind of like the day I went and gambled at the tables in Vegas, which I never did before. But somebody talked me into sitting down with them. They fronted my first money because we were waiting to go catch a flight, and they were a big time gambler. In fact, they just lost $30,000 that week. Few days we were there, but I was just dropping a bucket to him. But for me, every penny counts. So I sat at the table, and it was really interesting because I was winning hand over fist winning. And I literally
play with somebody else's money.
Right. I literally won $3,000 sitting there. And to the point that the manager came and changed the deck, which
Yeah,
when
yeah.
I was like, duh. But
I've had that done to me.
is that was the last time I ever played the tables again, because I didn't think I could ever win like that again. So I'm a one-time person and move on.
Yeah.
But the thing is to me, stocks are kind of the same way. But I want to share a story about teaching kids. I wish Mark was still here. Maybe he'll watch this later. I watched a man take his twins to the casinos one night. I was there. It was 2 years ago when we were there with Nick, and I was there with one of the millionaires. And he said, "Come on, I want to show you how to gamble." And because he knows how to do it really good. I have no idea how to do any of that. Well, this man was sitting there. I was more interested in watching this man with his twins that just turned 21 or 18. They just turned 18. And it was so funny. The one twin was like, "Oh yeah, let's do this, let's gamble." And he's giving them money to win or lose with, right? And teaching them how to do the crap table thing. The other twin goes, "Dad, can I just take my money and go shopping?" Now that's the kid
That kid.
Dad, can I just take my money and go? And Dad's like, "No, I want you to learn." And he goes, I've got it. I'm learning from him losing.
Yeah,
Well, all kids are different. You know that.
that's right.
So,
That's right.
but earlier you talked about Rich Dad, Poor Dad, and actually, and then my favorite book is Think and Grow Rich.
I like
Okay.
it. Yeah.
But both books have kids editions, which is great to give kids to read. So I think Sasha's looking for Rich Dad, Poor Dad. Maybe not. You have both. Yeah, so do I. Well, Rich Dad, I've actually got, my grandson came in a couple of weeks ago and asked me why I had 3 copies of Rich Dad, Poor Dad sitting around my office. Think and Grow Rich, rather. But
Think and Grow Rich. That's a good
yeah,
one.
but I think, but when my grandson was maybe 11 or 12, I bought him a couple of books that were basically written for kids, but like I didn't buy the Rich Dad Poor Dad version, but they do have them because I just looked them up on the internet to confirm that they do. But anyway, I have to unfortunately retire, but I do want to ask Sasha one last question, and that is, what do you think of trading Forex?
Forex.
I must admit something. I never traded Forex myself. I read so many books about it, and I was always fascinated about it. And there are also options available or so on. But there is a certain curve learning process. And I don't know, it's the same thing. Why don't play bridge? I've learned how to play bridge, and I was very good at the game itself. I mean, how to play the hand or so on. But I had to invest a certain amount of time to a bidding process, and you have to coordinate it with a partner and so on. And something in me was against investing the required time in both cases.
Well,
This-
Forex for the uninitiated, that's foreign exchange.
Yes, foreign exchange.
Yeah.
Trading pairs. So,
trading pairs, and this is something what I would love to try, but I never had that now is the time to try, or maybe a week later, or maybe a month later. And then I'm so absorbed with stocks and options that also I'm doing index options as well on S&P 500 index. For example, I have today I have expiration of puts on S&P. They both will expire worthless, but I sold one at way higher price than another one. So once it expires, I will make this money. Whatever I was finding, and you have to open different account with a different company with brokerage. You have to put some money, and you have to start sort of immerse yourself into trading pairs and calculate your timing and so on. I don't know. I just can't commit myself to that, but I'd love to do it one day.
I'd love to talk to you about it, but I do have to get going. I'm I'm really pleased that I came on today. It's very educational.
Thank you.
I honestly think that I like this. It's like chess. I probably have to spend a heck of a lot more time at chess because my mind doesn't move the same way. But learning about options, puts, calls, and making sure that I'm always selling, because I remember October 19th, 1987, extremely well.
Yes,
That was
a lot of us.
that was the day. And a lot of people don't remember October 16th, which was the Friday before, which should have given people a clue what was going to happen on October 19th.
You're absolutely right.
So, and as it turns out, it was even funnier, not funnier, but it happened to be my father-in-law's birthday. So, so anyway, so I've sort of always remembered that. But anyway, have a great day. Thank you. It was very educational. I will make sure, Sasha, I come back for next week. And
Next week, sure.
yeah, namaste. God bless.
Namaste.
By the way, at my age, don't expect me to remember what I learned today.
Hey, he's not going to be a long-term investor. He's going to be.
I have that problem too, and
Yeah.
I'm sitting
Me
here.
I'll
too.
learn.
Me too.
Yeah.
This
Yeah.
is
Anyway, namaste.
bad. Thank you
That's
very
why
much.
I take notes.
Right, I have to use my network.
Good.
It's very,
That's
very
good.
scary that, and I'm sitting here thinking, I know this sounds bad, but back in 2010, something happened that caused me to lose a lot of my memory. Previous, there's a lot of holes from that situation in the surgeries, and I'm sitting here thinking now. I think at one time I had an E-Trade account. I
Nice.
wonder if it's still there and I was making money. Because everything, it took me a long time to recover. And there was a lot of things that, you do that you don't really keep a book on. And I don't know that they would send me financial statements. I would have to go look. But something is now, when we were talking to E-Trade, all of a sudden my mind flickered and I go, did I ever have an E-Trade account?
Maybe.
So I'm going to go, I don't know if they would tell me. I would have to go look back at what my passwords would have been previous, my registrations.
Yeah, it's all done electronically these days, so
Yes.
you might as well.
Right. But it's interesting to me that I wonder if I'd had an account, if it still existed, if there's money in there. Wow, that would be weird.
Well, if you probably used your email address as your username, and then you probably forgot your password, but they have a mechanism for getting you to make sure that
To make a new one, actually.
to make a new
Well,
one.
and what's weird is fortunately for me, back then I owned my own servers, and I had the same kind of email address for years. It always ended in at PCIvoice.com. So it's either going to be, Kim something, whatever I made up. So I could probably figure it out. That's
Okay,
what I'm
good.
thinking.
Yeah.
Good. Let me know. We can definitely think about opening something like an investment club to get all our friends and people.
Yeah.
I'm in.
Start racing.
I'm
Why
in.
not? But I think this would be fun, and maybe get some kids to join in, and because this isn't about advice, this is about talk. This is what I kept telling Nick. The talks are better over at the coffee shop than they are on set. And this is what it, to me, inspires more about getting out there and doing it rather
And
than.
you learn by doing. That's the thing. You
Well,
get
and I've learned by
Absolutely.
sitting here and listening, because there were a lot of things that I did that I regret doing, but maybe I was doing it wrong. And now that there's you always need a mentor. And, Sasha's very experienced at it. And you've done some. Lynn has done some. I've been the chicken. So let's try a club, and let's get Wynn in on this too. Wynn keeps texting me. So
Yeah.
let's get Wynn into this, because I think he's been taking lessons from Sasha.
Good.
Yeah. He was on last week, so.
But I think we need to wrap up. Any
Okay.
last words of advice, Sasha?
Last word of advice. Hopefully, it's not
Preserve
my
your
last
capital.
word. It's not my last word. But what I would say, let's start. Let's finish the way we started. What is the most important rule, Jim?
Preserve your capital. Capital
Second rule
preservation.
and third rule,
Capital preservation.
preservation of capital or capital preservation. You can
Matter how
do
you
it any way you want it, but preservation of capital is really the most important thing. As long as you keep your capital and you're not making a lot, but you're making a little or keep it the same, you're in the game. As soon as you start losing part of your capital, now you start to have your doubts about yourself and trading. The other people are smarter, I can do it, or so on. You have to eliminate that thought. You are there to take other people's money. You're
Yeah,
there to win. You're there to checkmate your
that's
opponent.
right.
Because he is thinking that he's smarter than you. He wants to take your money. No way. Absolutely no way.
Yeah.
It's not going to happen.
So let's
That's
do
the way to
that.
do it.
Let's checkmate. Thank you very much.
Right. That's
Thanks
great.
all. See you tomorrow.
We
Thank you,
will
Sasha.
see you guys next week.